Welcome to Foundation One. So today I'm not going over baby steps. I'm not going to hold your hand and teach you what a candle is and what a wick is and how to open a chart. If you want to do that, you got to go to YouTube and just watch a bunch of videos that are out there. There's millions of videos out there. So what matters now is learning how to actually read price and context. So what does that mean? Well, can you properly identify when the market is trending versus consolidating? Can you spot when structure is clean and when price is just chopping traders up? So that's what this module is about. We're literally building your ability to read market structure, understand session behavior, and make sense of price without overcomplicating the chart. Because if you can't read context, you're just going to keep forcing setups that were never there in the first place. And no more guessing. This is going to be your base from now on. And market structure is the framework behind price. I'm not just looking at candles. I'm looking at how price is organizing itself. Is the market making higher highs and higher lows? Well, I don't know. How can you tell? Well, you're going to mark the first low over here. You're going to look at the next low. Oh, it's much higher than the previous one. Oh, it's much higher than the previous one. Higher lows. It keeps stacking. So then the question is, what the heck is a higher high? So you see a high right here. You're like, okay, where's the next one? Oh, it's over here. Here's the next one. So let's look at it from the different perspective right here. Okay. Is the chart making lower highs and lower lows? So this is going to tell me if sellers are in control. So this is a high and it just gets lower and lower than the previous one. Same thing with the lows right here. It just gets lower and lower and lower before breaking out. And look, if price is stuck moving sideways, then we're likely in a consolidation zone. It's not a clean trend. You see a clean trend right here before it starts to curl and then it gets stuck and then we're sideways. It goes up a little bit, but it's not a clean structure where it just keeps going up and up and up. This is just telling me that we're just in consolidation. But this matters because structure gives context to everything. It literally tells you how to position yourself in the next move. It's sideways, but what's going to happen next? Are we going to keep continuing up and up and up? Or are we going to stay sideways where we have to be patient before the buyers or sellers start to show their hand? Or are you going to be prepared to enter puts in a reversal? So as you can see right here, we actually made a reversal. So a lot of traders get chopped up because they try to force trend ideas inside a messy structure. People will literally try to buy here just because we're getting higher highs and higher lows. And so people think that's going to continue. So then they buy here at the top and then they stay stuck because it reaches back over here, but it immediately gets rejected from this previous high. And then we just stay in this zone where we're just inside of it before rejecting. So if you can read structure properly, you stop trading random candles and you start understanding who's actually in control. So what we have here is trend versus consolidation. Once you understand market structure, the next question is simple. Is price actually trending or is it just consolidating? So a trending market moves with direction. As you can see right here. It's just moving with direction. It's pretty linear. And there's just going up and up and up. So it's expanding. It's respecting structure. And it's showing a clearer intent. Rather than when you're in a consolidating market. For example, the price starts compressing. We go right here. We're moving sideways. So you'll see it right here once you start to mark up your charts. So price starts compressing, moving sideways, and then trading back and forth in this range. This matters because when it's trending, you get cleaner continuation ideas. Well, consolidation creates hesitation, fake outs, and a lot more chop. A lot of people thought we're going to short right here, and guess what? We just kept pumping, and then they get screwed over. And then guess what? We think we're going to break past this. We're going to break past this one right here, and guess what? We break it a little bit, and then we come straight down. A lot of fake outs. This is why we don't trade in consolidation zones. So before you look for an entry, ask yourself, Is this market really moving purpose, or is it just stuck in this box here? That question alone can save you from a lot of useless trades that you don't need to take until there's a clear picture where we're actually breaking out of that box or that zone. And you can see that we eventually do. Here's the fun part. You're going to have your key levels, your support, and your resistance. Key levels matter because price doesn't move randomly, as we know. There's certain areas on the chart where price has already shown reaction, rejection, or decision. So that's what support and resistance really is. You know, they're not magic lines. They're literally areas where the price had, where the market has shown interest before. So let's look at where support is, where buyers may step in. So we're going to draw it at the bottom wick right here because this is where buyers actually stepped in. And then we're also going to add right here that top of the wick on the first high, because this is where the resistance is. This is where sellers may start pushing back. And once those levels break, they literally can shift roles. And this matters because levels help frame decision making. They help you understand where price may react, where moves may stall, where continuation or rejection starts to make a little bit more sense. So if you're entering trades with no awareness or nearby levels, you're literally trading blind. So you can see right here, we came over here, we stayed above the bottom. You can see we try to break out, came back down, try to break out again, came back down. We almost tried, but there's too much selling pressure. Down, down, and then we finally broke out. So support and resistance isn't literally predicting the future perfectly. They're just there to help you understand where price is likely to react, likely to hesitate, likely to reject, or even break through, as we see right here. And there's a lot of hesitation over here, but ultimately we eventually broke out of it. So that awareness alone has improved chart reading really fast. All right, last section, liquidity and sweeps. So liquidity is one of the reasons why price doesn't always move cleanly. The market is going to push you into obvious highs and lows or equal levels before showing the real move. And that's because those areas tend to, hold stops and breakout entries, and it traps a lot of traders. So when price is running to a higher or prior high or a prior low, that doesn't automatically mean true strength or weakness. Sometimes it's just a sweep before a reversal. Other times it's a sweep that leads into continuation. You could have been like, okay, well, we keep bouncing off of this. I'm going to get in at a break below it. And it breaks, you can see it. But guess what? You just get swept. And then the real move happens right after. So, what's my point? The point is, stop reacting to every break like it's a confirmation. You want to understand what price took, how it reacted after, and whether there was real follow through or not. Because a lot of traders get baited at the exact point they think the move is finally starting, which is a prime example right here.